It's good to be Delta these days, but now that may not be the case for the rest of the airline industry, with some of its rivals lowering earnings projections right now for various reasons. Is now the time to consider airline stocks? Joining us tonight to talk about that, David Vernon is Senior Transportation Analyst at Bernstein. David, thanks for joining us tonight.
Thanks for having me on.
And I noted even with a decline for the group in the month of March, overall, the XAL, the New York Stock Exchange Airline Index, is up 13% this year. So it's had a pretty good year overall so far.
Yeah, I think coming into the year, there was a pretty large sell-off in the equity markets, and we started from a fairly low base. And I think what we've learned is a little bit more confidence in the booking environment and also in execution, particularly carriers like Delta and their strong earnings today.
But how much of an impact do you see the Max jet grounding having on the industry at this point?
I look, near term, it's very disruptive, right? If you take these planes out, your pilots have been bid, your crews are ready to fly. It's very hard to take cost out very quickly. I think the airlines are now ratcheting down their schedules, and you'll see a little bit less capacity coming into the marketplace, somewhere in the low single-digit range of capacity coming out. And that will start to work its way into the fare environment. And as the airlines get better at scheduling down the staffing resources and the other costs that are required to run the operation, you'll see the financial turbulence settle down a little bit and earnings actually get a little bit stronger.
Delta seems to be doing so well these days. What are they doing that other airlines are not doing right now?
Well, I think one of the key things that they have going for them is their partnership with American Express and that rewards program. As far as an affinity group of flyers that a credit card company would want to target, travelers with a lot of business expenses, with a lot of expense going over the card, that's a very, very attractive market. Delta's renewed their partnership with Amex a couple years early. That's adding a point to unit revenue, and that's incredibly accretive for them in the near term. So one thing is that Delta arrangement. The other thing that Delta's doing really well is understanding how to monetize their network better. Go ahead.
Yeah, well, I'm sorry, I'm running out of time, but I want to ask you, late today, JetBlue announced they are going to begin transatlantic flights in 2021 from New York and Boston. Will that have an impact on that route? Will there be an airfare war? What do you think will happen?
I think at the margin, as Delta tries to carve out some share, you should see some weakness in walk-up fares. I think where there's a couple things where JetBlue is going to have some challenges. They don't have the same connectivity at either end of the network. They don't have a lot of the same capability that the other airlines have as far as a distribution channel inside of Europe. And as far as the configuration of that aircraft goes, we're going to have to see how they come out and how they're going to market that aircraft. It's going to be a little bit smaller than competing aircraft, right. And your price point, are you going to be able to actually make that operation work? So JetBlue certainly has an opportunity to come into that market. They're not going to have as an attractive customer base as far as the corporate traveler goes. So we'll have to see how that plays out.
Indeed. David Vernon with Bernstein. Good. Thanks for joining us tonight.